Assalamualaikum, salam sejahtera, Om Swastiastu, Nama Budaya. A very good afternoon to all of us. First of all, allow us to extend our warmest welcome to all of you in this joint OECD and Government of Indonesia webinar, Tax Challenges and Reforms to Finance the COVID-19 Recovery and Beyond. The aim of today's webinar is to find the challenges and opportunities for Indonesia to improve its fiscal space in order to respond to the current crisis and to complete its long-term national development plan. Identifying and prioritizing tax policy and tax administration strategies are important to increase tax base and to maximize the revenue collection. In this webinar, we will have the opportunity to have high-profile experts to share their insights regarding this issue. There will be two sessions. For the first session, we will have three high-level speakers delivering their keynotes. We will have Bapak Febrio Kacaribu, Head of the Fiscal Policy Agency, Ministry of Finance of Indonesia, Mr. Pascal Saint-Amans, Director of Center for Tax Policy and Administration OECD, and Bapak Suryo Utomo, General Director of Taxation, Ministry of Finance of Indonesia. Following the session, we will have a high-level panel discussion that gather experts to discuss about tax and its administration, which will be led by Ms. Suska, a Senior Policy Analyst, Fiscal Policy Agency, and there will be several high-level speakers too in that session. To have a good sessions, I will also share the house rules of today's event. First, Zoom meeting will be logged at 2:30 p.m. Jakarta time, or when it reaches its capacity. Second, if you have question, please write your question on Q&A feature on the Zoom webinar application or live chat feature on YouTube. There will be moderator will read the question to the panelists during the Q&A session. And regarding the terms and conditions for the e-certificate for Indonesian participants, allow me to explain this in bahasa Indonesia. Untuk e-sertifikat hanya akan diberikan kepada peserta yang sudah mendaftar dan mengisi kuesioner. Tautan kuesioner nanti akan dibagikan di akhir sesi panel selesai. Kemudian juga panitia berhak untuk tidak memberikan e-sertifikat jika peserta tidak memenuhi persyaratan di atas. Okay. Now, to open our webinar, we are honored to have Bapak Suhazil Nazara, Vice Minister of Ministry of Finance of Indonesia, to deliver his opening remarks. Bapak Suhazil, please, the time is yours.
Very good afternoon to all of you. It's my privilege to be here. Pak Suryo, Director General of Tax, Pak Febrio, Chair of the Fiscal Policy Agency, Pascal from OECD. First of all, I would like to welcome you all to this joint tax seminar, Indonesia and OECD. And it is my honor to speak before all of you, especially it's also my honor to recognize that Indonesia OECD cooperation once again going to the next activity, that is this joint tax seminar. I would like to thank OECD for the support, all of the support provided by OECD to Indonesian economy. All of this time, OECD has been a very close collaborators and close supporters of many of the Indonesian policy and also Indonesian development. During my time at the Fiscal Policy Office, I've been benefited from a lot of OECD support, and I hope that OECD will continue to support Indonesian economy in the future. I would like also to congratulate the Ministry of Finance, especially BKF, and also the Digitex for conducting this seminar. It's very important, very timely in the middle of this COVID-19. It is our major agenda, major development agenda, the COVID-19, and all of this time we have been very concentrating on protecting health and lives of many people. But at the same time, we are also have to make sure that the purchasing power, social protection continue to be in place, and also supporting our business sector. And just like what is conducted by many other countries, government of Indonesia is providing a lot of the fiscal incentives, tax breaks to the business sector as well as the individuals. And this thing in Indonesian case, so far we have already put probably about 0.5 to 0.7% of the GDP of our GDP as in the form of tax breaks. It is of course very the economy is under pressure because of the number of economic activities that is under pressure. So probably the use of these tax breaks will not be optimal. And despite that, the tax break is taking place in the middle of relatively low tax to GDP ratio of Indonesia. And we know that this is our constraint, and it is in the medium term. We have to make sure that our fiscal consolidation can also be in place. If this year our GDP deficit is 6.3% of the GDP, we are aiming at 5.7% deficit of the GDP next year. But in the medium term, in 2023, our deficit must go back down below 3%. And we know that at that point, we need to have the fiscal consolidation. Now, low tax to GDP ratio and the need to have the fiscal consolidation will make it very important for Indonesia to put together a good tax policy reform as well as good tax administration reform. It is very important. And I know that my colleague in the DigiTax as well as the Fiscal Policy Office has been working hand in hand in order to put together a good tax reform. And this seminar will be a good venue to channel different options, different ideas, and different comments that audience may have on the Indonesian tax policy reform. We do need the fiscal consolidation in the medium term, and that should be taking place in terms of the policy as well as the tax administration. So both are very important, and I hope that this seminar can bring in international experiences. My colleagues, Pascal from OECD, please do bring the international experiences on the fiscal reform, tax reform, both in policy as well as in administration. And my colleagues from different parts of Indonesia, from business sectors or research or other entities, please also join in to give us inputs and feedbacks. I'm very happy that this session can also be, two of my colleagues will speak later, and also Pascal will also speak on the international agenda. Before I left the Fiscal Policy Office, I managed to put Indonesia as one of several few countries in the world that is producing the tax expenditure report. And right now, it is shown very clear that the fact that we have already shown it, we have already calculated it for many years in the past, since 2016 until 2018, is a good basis to tell for our public communication about our fiscal incentives. I hope that this tradition will continue. I can assure you that it is my intention that our tax expenditure report should continue to be published and should be used as a benchmark, as a part of the public communication. 2019 report should be out very soon. And for the 2020, we believe that our tax expenditure report will be quite big. Our tax expenditure for 2020 will be very big, and it is very important that we continue to publish the report, and this exercise should be part of our public accountability on the tax incentive and also tax reporting system in Indonesia. So thank you very much for all of you for attending this seminar. I wish you all fruitful discussions and looking forward to receiving different ideas from this seminar. Thank you very much and have a good discussion. Have a good day.
Thank you, Bapak Swahasil. Now we are starting session 1. In this session, we will have several high-level speakers deliver their keynotes. And to start the session, we are honored to have Bapak Febrio Kacaribu, Head of the Fiscal Policy Agency, Ministry of Finance of Indonesia, to deliver his keynote speech. Bapak Febrio Kacaribu is the Chairman of Fiscal Policy Agency, Ministry of Finance of Republic of Indonesia. He has been the head of LPEM Macroeconomic and Financial Research since 2015 before appointed as the chairman of Fiscal Policy Agency on April 3rd, 2020. He received a Bachelor of Economics degree in 2002 from the University of Indonesia and continued with a Master of International and Development Economics from the Australian National University in 2005. In 2014, he earned a PhD from the University of Kansas. His areas of expertise include business economics and projection, economic models, financial economics, monetary economics, and public policy analysis. Please, Bapak Febrio, the time is yours.
Thank you, Rafael. Good afternoon. Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, Pak Suryo, Pak Pascal, thank you for having me today. And giving me some brief time to brief us all about the economic challenges facing Indonesia in the context of this joint webinar, Ministry of Finance, OECD. We really appreciate the theme of tax challenges and reforms to finance the COVID-19 recovery and beyond. This is a very, very fitting topic, very, very relevant indeed. I would like to update us all. Go to slide number 4, please. This is where we can see a little bit of updates on the cases of COVID-19 that we are still facing. Unfortunately, it is still escalating, and we are still finding ways in trying to deal with this COVID-19 pandemic, as well everybody else all over the world. Go to slide 5, please. And this is how all over the world is facing the same challenges. As we saw last quarter, for example, many countries, big or small, G20 or small countries, everybody is facing the same big challenge. And everybody is responding quite aggressively, fiscal-wise. We can see in the down below here, almost everybody is introducing a very sharp increase in their fiscal deficit, including Indonesia. But as you can all see, that not many countries, not all countries have the similar results in containing the economic impact of this COVID-19 pandemic. Indonesia is one of the, maybe we could also say, fortunate that we can still contain the impact of this pandemic on our economy to be still at 5.3% minus compared to others already in the double digit, or even some like India in 24% of GDP contraction. Go to the next slide, please. Here's how we saw what happened in 2020, first quarter, second quarter, and this is our outlook for the third quarter, which is already passed, and we are waiting for the data released by the BPS about 5 weeks from now. And as you can see, the only game in town is fiscal policy. As you can see, consumption, investment, trade, they are all negative, like everybody else in the world, excluding maybe 1 or 2 outliers in the world. Next, go to slide 7. Given those challenges, though, we have some promising signs of slowing but we see some certain changes towards a positive direction. For example, we follow the mobility index of how economic activity in our country by everybody, be it consumers, be it firms, we are all impacted by this COVID-19, and our economic activity can be traced and described by our mobility in the economy. As we can see here in this picture, the mobility index is slowly improving towards the baseline to the beginning of the year. Let's jump to slide number 11. Here's how the government responded with such a big fraction of the budget. This is close to 25% of our budget in 2020, 695 trillion rupiah devoted to health, social protection, business incentives, corporate financing, support for sectoral and regional government, and also support for especially small, medium enterprises. Go to the next slide. This is how our social protection program has been designed for this particular year. This is adding on top of the already existing social protection program that is usually done every single year, like conditional cash transfer. This is the leftmost column, which is usually reaching 92 million households every single year. But then on top of that, we add a lot more programs trying to make sure that the lower income deciles, even up to fifth or sixth decile sometimes, to be reached by the social protection program, making sure that the less fortunate, the most vulnerable group of our society, as much as possible protected from the negative impact of this COVID-19, from the negative impact of this COVID-19 on the economic activity. So this is one of the biggest program in our spending in 2020. Go to the next slide, please. This is the realization, which is initially it was slow, but then this is now quite progressing very quickly and accelerated, and we are optimistic that by the end of the year, all of the programs that we plan for the National Economic Recovery Program should be close to 100% realization. Go to the slide 17 now, please. This is how we see 2021. Economic growth should recover from a very low base indeed, because we are looking at, usually we are growing at 5% per year, but this year there's a big risk that we can have a negative growth somewhere around -1%. But as a result, because of that low base, we see a potential of recovering at least by 4.5% up to 5.5%. So we are quite optimistic about that. Also, we are to be seeing better indicators in the development target, like unemployment rate, poverty level should be also getting better. Even Gini ratio should be better as well next year. Go to next slide, slide 18. This is how the budget of 2021 looks like. If you notice that, for example, in the expenditure part, B, last budget of 2020, we had the total expenditure by the government was 2,739 trillion rupiah. Going to 2021 budget, that is going to be slightly increased to 2,750 trillion rupiah. This is what we believe to be needed by the economy, that the government should be still present in the economy with the budget that is still slightly expansive, but it is going to be consolidative. What we mean by consolidative is that if in 2020 we are targeting for a budget deficit of 6.34%. That's the lowest line over there. We are planning for a lower budget deficit in 2021, which is at 5.7% of the GDP. So the size of the financing will be slightly less compared to it is in 2020. Go to the next slide, please. But there is a risk, clearly, because our tax ratio has been declining in the last several years. And also, as a result of this COVID-19 pandemic, 2020, and also as a result of our tax incentives that we are giving a lot in 2020, as a result, our tax ratio will be quite corrected very sharply. We are expecting that our tax ratio will be slightly below 8%, which is one of the lowest among emerging economies. So this is the risk. And we have to face this risk because we need that to face the COVID-19 pandemic and also the impact on the economy. Good news is that we've been doing a very good fiscal discipline in the last several years leading to 2020. As a result, our debt ratio prior to the 2020 year, until 2019, we were able to keep our debt ratio relatively low compared to other emerging economies. As a result, our 30% debt to GDP ratio is giving us enough fiscal space to be responding to this pandemic and also the impact to the economy in 2020, 2021, and even until 2022. And hopefully, by our commitment, by 2023, our budget deficit need to go back to below 3% as our fiscal discipline suggests. But this is not without risk. So this is the risk that we have to face, and making sure that our spending is done very effectively, making sure that the economic impact, multiplier impact of our spending is to the maximum as possible. Go to the next slide, please. And this is how we are going to do our spending mostly in 2021. Education, that is going to be a big chunk of our spending, which is usually around 20%. Health, it is going to be above 5%, which is required. Social protection is still going to be big. Infrastructure, we still need to start our infrastructure, not just trying to defend our economy through maintaining the spending level of our vulnerable group, but we also need to make sure that investment need to go up, which is how infrastructure should play a big role in pushing that investment forward in 2021 as well. We need to maintain food securities, so we spend enough money also for programs about food securities. We make sure that our tourism can also recover in 2021. We need to make sure that new attractions but the way we conduct our tourism will need to be in the context of new normal for a little while. And we are making sure that our tourism sector is well supported. And lastly, number 7, which is last but not least, learning from 2020, where we can rely on ICT infrastructure to still conduct our economic activity quite efficiently. We need to make sure that our ICT infrastructure, like what we're using right now, is still going to be available and even much better in 2021, making sure that the efficiency gain that we have in 2020 will be also continued to the next year. Next slide. We are also working on omnibus law for job creation, and these are a lot of clusters of laws that is going to be revived, and also making sure that all of the laws contained in this omnibus law will be consistent with each other and maintaining the push for investment and ease of doing business in our country, to spur more growth, and of course clearly to spur more government revenue. Next slide. Go to the next slide. this is our medium-term outlook, and this is how we need always a discussion on how to improve our tax ratio. In the medium term, we are going to face these big challenges. We saw how we've seen how the economy has performed in 2020, and we have seen how the big challenges that we're gonna face still in 2021 and maybe even continue to 2022. But then we also seeing a big challenge in terms of generating government revenue this year and next year's onward. So this is the context for us in coming up with effective and strong reform in our government revenue. Having said that, that will be all that I can say. And thank you very much for having me, and happy discussing, happy webinar, and hopefully we can always get together and talk about reforms and how to improve our taxation, especially in the tax ratio side. Thank you very much for having me. Back to you, Rafael.
Thank you very much, Pak Febrio. Next, we are honored to have Mr. Pascal Saint-Amans, Director of Center for Tax Policy and Administration, OECD, to deliver his keynote speech. Mr. Pascal Saint-Amans is the Director of the Center for Tax Policy and Administration at the OECD. He is a French national who joined the OECD in September 2007, where he played a key role in the advancement of the OECD tax transparency agenda in the context of the G20. Prior to his appointment as director, he was the head of the Global Forum on Transparency and Exchange of Information for Tax Purposes since 2009. Mr. Saint-Amans graduated from the National School of Administration in 1996 and was an official in the French Ministry for Finance for nearly a decade. Mr. Saint-Amans, please, the time is yours.
Good afternoon to you all, and extremely happy and honored to be able to be with you today and present these remarks in the introduction of your seminar. I would like to thank the Vice Minister, Pak Nazara, for his very good introduction, and I took a lot of note during the presentation of Pak Febrio Kakaribu, which I did find extremely interesting and really setting well the scene. So very happy. We have, I think, a special relationship with Indonesia, and I would like to thank you all for that. In particular, DG Pak Suryo Utomo, with whom we exchange often and have a program, and also Pak John Hutagol with his whole team, with whom also we work closely. So you can see that we have a close relationship, a good partnership, and with Andrew Auerbach, who is now based in Jakarta, we can even strengthen the link in spite, and I'm coming to the topic, in spite of this crisis, which obliges us to work from home. I'm from home right now in France. Andrew, unfortunately, cannot go as often as he would like to the Ministry of Finance or the tax administration, but still, we're able to work together. So what are the main challenges and issues? I think that Pak Febrio Kakaribu has just presented it extremely well and eloquently. One of the major challenges of Indonesia is indeed the fact that among the G20 countries, and also more globally in the developing world, the ratio of tax on GDP is one of the lowest in the world. It was slightly above 10%, and we've just seen that it's expected to go even below 8%. And I think there would be consensus among economists at the UN, the IMF, the OECD, and others to say that we are quite far from the minimum which would be required to foster development. And this, in time of COVID crisis, is even more challenging, because as we at the OECD have been saying, and that's true for all countries, it's no time to do fiscal consolidation. And I think the DG for Treasury has just indicated that there will be no rush to fiscal consolidation, even though you will need to strengthen the ratio on tax to GDP. So how do you cope with that? I think is not an easy challenge. And has to be dealt with carefully, even though, as indicated, what will be the main test is the sustainability of the debt. And it is true that you start with an extremely low level of debt, around 20%, increasing to 40% as we have seen. But this ratio is low enough to guarantee that the situation is not as critical as it could be. So the challenge, I think, for Indonesia is how do you ensure the sustainability of this increasing debt by increasing the ratio on tax to GDP, but in a way which doesn't harm further the economy, which has been impacted by COVID. And you know, worldwide, the estimate of the OECD is that COVID will cost between 9 to 13% of growth of GDP. It's a recession which is ahead of us, even though in 2021 we expect that all that will just bounce back up. But we are facing this. Indonesia is slightly less impacted than OECD countries, but still the picture is not great. And in that sense, I think that the reflection on the tax reform in the midterm or long term, the IMF would say midterm review strategy would be necessary and is going on, but a trajectory which will increase significantly the ratio of tax on GDP is, I think, absolutely necessary and key. In that context, we think that international tax, which is what the OECD is the most involved in, international tax can be a tool to secure the ability of Indonesia to collect the taxes which are due and to ensure the success of the tax reform. Because if you increase taxes domestically without securing that there will be no international loophole, it may backlash and not be that useful. And on the international front, I would like to mention three items. One is transparency. Transparency, as you know, is about having access to the information on the assets, the bank accounts, or now the crypto assets of the residents of the country who, being wealthy, would be tempted to hide their money abroad. And we know that in the region, there are a couple of jurisdictions, at least, which have had the tradition of bank secrecy. This has come to an end, and Indonesia has been among the drivers to put an end to bank secrecy and to ensure that it would get the information, including the banking information of its residents abroad, including from Hong Kong, including from Singapore, including from Malaysia and other jurisdictions. This is a sea change, not only because the amount of information which is now being exchanged is really massive. I think there were some official numbers floated on how many bank accounts you received from Singapore, but worldwide, if we put it in the big picture, more than 80 million, I think it's 84 million bank accounts were exchanged in September 2019 for a total value exceeding 10 trillion euros. That's a lot of money. Why is it so important? One, because it allows you to get this information and to tax people who had assets abroad. But in the long term, it also ensures that you can better tax capital income. And that's something I would like to invite you to reflect, especially given the level of inequalities and the need to reduce these inequalities. Using transparency is key, and Indonesia is engaged on that path, and we're assisting. We even have tax inspectors without borders project with you to assist in the use of this information. But that's not only using it to tax the people having bank accounts abroad, but also rethinking the personal income tax. The second element I would like to mention is the BEPS project for base erosion and profit shifting, and the taxation of multinational companies. Developing countries, emerging economies like Indonesia rely a bit more than others on corporate income tax, and in particular, corporate income tax paid by multinational enterprises. Indonesia has been at the forefront of the implementation of the BEPS project. I would like to congratulate you on that, and you should use it to strengthen corporate income tax in general, which I think is very important. The third element derives from this and is about the taxation of the digitalization of the economy. And here, there is a trade-off between acting, and we understand that Indonesia wants to act and would like to tax at corporate income tax the digital companies, Facebook, Google, and the likes. But at the same time, you're engaged in a multilateral negotiation at the OECD. It is true that this negotiation takes time and probably will take more time than expected. We were supposed to deliver a solution by year-end this year, 2020. We are right now, literally today, tomorrow, and next week, we'll be discussing in the inclusive framework. It's unlikely that we have an agreement, but we have made good progress towards one new nexus to allow countries to tax foreign companies, even though they would not have a permanent establishment, new profit allocation. So we'll have a blueprint on what we call Pillar 1, but no agreement yet. And we hope that in 21 we can reach this agreement. But also we are going to put in place a global minimum tax, which Indonesia would benefit strongly from, because the global minimum tax is a way to put an end to the race to the bottom. In that environment where, one, you need to strengthen domestic resources, two, you have an international tax dimension that you are fully involved in and participating to, we think that we have to deliver even more technical assistance with you, for you, but also with you in the region. And we very much appreciate the leadership of Indonesia. You were chairing the Segatar, and you've done, I mean, tremendous job doing so. Minister Sri Mulyani, a couple of weeks ago, participated to a panel with President Asakawa, who is the president of the Asian Development Bank, and I was on that panel, and I think we all supported the role of ADB as a platform, a hub for enhancing cooperation in this region, and we think that Indonesia has a key role to play. And finally, a key role to play also in the South-South cooperation. Indonesia very kindly proposed tax inspectors to participate to our initiative, Tax Inspectors Without Borders. So you can see that we have close links to face the big challenges ahead of us. The last words, the last two words are about the tax administration. Tax policy is nothing without a solid tax administration, and we're glad to work closely with the Indonesian tax administration. I mentioned DG Pak Suryo Utomo, with whom we work closely. So there is a need to strengthen the tax administration, and that's where Segatar, ADB, and the Forum on Tax Administration Indonesia is a member of, can play an important role to better collect the taxes, to better fight the informal economy. There are models, and we are working in the Forum on Tax Administration on the tax administration of the 21st century. And a country like Indonesia actually may move from the current situation to an extremely modern tax administration. There are tools for that. The digitalization, the digitization of tax administrations can be that tool. You can see that there is a lot going on. I will stop here, thanking you again very much, and again being extremely proud of participating to this seminar and having the team, David Bradbury, Ben Dickinson, and Andrew Auerbach being part of this conversation. So thank you very much.
Thank you very much, Mr. Senamans. Now, for our last high-level speaker, we are honored to have Bapak Yon Arsal, Assistant to the Minister for Tax Compliance Affairs, Ministry of Finance of Indonesia, to deliver his keynote speech. Bapak Yon Arsal is the Assistant to the Minister for Tax Compliance Affairs, Ministry of Finance of Indonesia. Previously served as Director of Potential at Digitex. He was appointed to be his current position on January 3rd, 2020. He completed his Bachelor of Economics study, majoring in accounting at Pajajaran University in 1995. Then he earned a Master of Arts in Economics from Kobe University, Japan in 2004. And in 2005, he earned a Master of Science in Fiscal Administrations from the University of Indonesia, continuing and completing his study at the doctoral program in economics at Kobe University, Japan in 2007. He's been involved with tax and its administration at various roles since 2011 in Digitex. Please, Bapak Yon Arsal, the time is yours.
Your Excellency Vice Minister of Finance Bapak Suhasil Nazara, honorable speakers today, Head of Fiscal Policy Office Bapak Febrio Kecaribu, Director of Center for Tax Policy and Administration, Mr. OECD, Mr. Pascal Senamans, and Head of the Global Relation and Development Division of the OECD, Mr. Ben Dickinson. Panelists, participants, organizing committee, ladies and gentlemen, good afternoon and good morning for those who are in Europe. Allow me on behalf of Bapak our DG, Bapak Suryo Utomo, to deliver his speech and presentation and this webinar. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, Namo Buddhaya, Salam Kebajikan. It is not the strongest of the species, nor the most intelligent that survives. It is the one that is most adaptable to change. We begin my speech in this with this famous quote to express what is happening now. We are now in the era of rapid technology disruption that transform businesses and economic landscapes. Entrepreneurs have no choices but to utilize information technology to transform their business model into digital transaction schemes. Business changes, so does the tax administration. The Directorate General of Taxes has a long history of digitalizing its tax administration, which is always an integral part of its tax reform agenda. It started with the tax legal framework reform in 1983, continued with the bureaucracy reform in 2001, and was then followed by tax administration modernization until 2008. The organizational structure was improved afterwards until 2015-14. The next phase of the tax reform has already commenced since 2017. The current tax reform aims to create a strong, credible, and accountable institution, to establish an optimum synergy between Directorate General of Taxes and third parties, to improve compliance rate and to boost Indonesian tax ratio, which is currently is very critical, tough, and challenging for us. The reform is comprehensively defined based on the 5 main pillars of the tax administration. First, restructuring the organization in order to sharpen and improve the functions. Second, creating competent and accountable human resource with high integrity. Third, reforming IT and database to support the core business process to produce more reliable and more accurate decision and outputs. Fourth, developing effective, efficient, and accountable business process. Lastly, reforming legal framework to expand the tax base, to increase legal certainty, to reduce compliance costs, and to increase tax revenue. Digital transformation is a significant part in the current tax administration. As a part of the reform, DGT is currently in the process of establishing a new tax administration information system called core tax administration systems. The ultimate objective of the project is to transform the tax administration to be more adaptive to the current technological development and digital disruptions. A dedicated team has been working hard to ensure the success of this project, which is expected to be accomplished in 2024. Ladies and gentlemen, changes may also occur unexpectedly. The COVID-19 pandemic has made a lot of changes and adjustments in the way we live. Now, the question is how do we deal with it? How does the tax administration, including DGT, respond to it? In response to such a current situation, DGT develops and provides IT-based services and business process to make its administrative work and services operate. Pursuant to COVID-19 prevention protocols, DGT limits face-to-face interaction between taxpayers and tax officers. Taxpayers are encouraged to utilize available e-services under the DGT platform, such as e-registration, e-billing, e-filing, e-objection, e-withholding, and e-VAT invoice. If a taxpayer is required to directly come to a tax office, the taxpayer is obliged to fill out an online appointment form prior to his or her arrival to the tax office. In addition to providing those online services application, DGT also empowers and strengthens its call center to deliver better information and consultation services, as well as to provide a reliable and confidential channel for complaints since 2019. Since 2019, DGT has been in cooperation with the Australian Taxation Office, ATO, to develop new business process in providing services called as Click Call Counter or 3C. 3C accelerates the existing automated services and implements a back-end office for the call center team. This project covers 168 types of tax services and expected to be accomplished in the next 4 years. Up to semester 1 this year, 39 services have been completed to become fully automated service. So still a long way to go for that. Ladies and gentlemen, since last July, we have introduced value-added tax on foreign e-commerce by issuing the regulation of Minister of Finance number 48 year 2020. It is an implementing regulation of government regulation in lieu of law number 1 year 2020 known as Perpu number 1, which has been passed as law number 2 year 2020. The new regulation authorized DGT to appoint foreign merchants and foreign service provider as VAT collectors on their sales to Indonesian customers. Up to date, there have been 28 foreign companies that have been appointed as VAT collectors under the new regulation. Perpu 1 also regulates the imposition of income tax and electronic transaction tax. However, when it comes to such matters, we are committed to follow the international collaboration to reach a long-term and consensus-based solution led by OECD under the inclusive framework. In fact, the year 2020 is a critical year as it is the year that the consensus on taxing the digital economy is expected to be reached. The inclusive framework on BEPS program started almost 7 years ago, resulting in many deliverables and measures that have been completed and implemented. The most anticipated global consensus is still on the table. Should the consensus be concluded, it would be a milestone in the history of taxation, but with an important note, provided that the consensus is formulated fairly and reasonably. Ladies and gentlemen, there are a lot of things to do. The challenges we are facing now are now tougher than ever. Nevertheless, our sincere contribution will shape the global economy for decades and hopefully for a brighter future of our next generation. With that, finally, I would like to thank our co-hosts, the Fiscal Policy Office, BKF, and OECD for their very hard work in making this webinar possible. Enjoy the seminar. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Bapak Yoransel. Now, We are coming into the second session. Distinguished guests, ladies and gentlemen. Since we are entering the high-level panel discussion, this session will be hosted by Ms. Suska, a senior policy analyst for Center for State Revenue Policy. Ms. Suska is a senior policy analyst, but prior to her current position, she was the head of VAT on Trade and Industry Subdivision. Ms. Suska graduated as Diploma 4 in Accounting from Indonesian State College of Accountancy. She then earned her Master in Public Finance from National Graduates Institute for Policy Studies in Japan. She also got her Master in Economics from University of Indonesia, and continuing that, she got her PhD in Economics from University of York, United Kingdom. She has been working with tax-related issues since joining Ministry of Finance, since her time in Digitex, and now taking the policy analyst role in Fiscal Policy Agency. So please, Ms. Suska, the time is yours.
Thank you, Rafael. Good afternoon for the participants. Thank you for joining this event, the attendees and the viewers on Zoom and YouTube. It's such an honor for me to be the moderator of this panelist session. Today, we have learned a lot from previous prominent speakers on Indonesia's tax reform agenda, the fiscal consolidation, the economic condition, and the budget challenge of Indonesia, and also international tax climates, which provide challenges and opportunities for Indonesia, and the digitalization of tax system of Indonesia. In this session, we will explore more. We have a panel of experts who will share their insight on the current state of issues regarding tax policy and administration, not only for responding to the COVID-19 situation, but also providing tax policy that support inclusive and resilient growth. The discussion will also include the global taxation development issues and business sector perspective for us to be put into Indonesia's context. Here we have our panelists with us today. First is Ms. Pandey Putu Oka Kusumawardhani, the Acting Director of Center for State Revenue Policy, Fiscal Policy Agency. Then we will have Mr. Paul Takmaruri John Liberty Gaul, the Director of International Taxation, Directorate General of Tax. The third panelist is Mr. David Bradbury, Head of Tax Policy and Statistics Division of OECD. And last but not least, we will have Ms. Ai Ching Pan. She is the Market Leaders and Tax Partner at PwC Indonesia. After all the presentation, we will have a question and answer session. Please drop your question in the Q&A feature for the Zoom attendees or in the live chat on YouTube. Please put your name and institution and also specify to which panelist is your question directed to. So let's proceed to our first panelist. Our first panelist is Ms. Pandey Putu Oka Kusumawardhani. She is currently the Acting Director of Center for State Revenue Policy, Fiscal Policy Agency of Indonesia. She's been dealing with international tax issues since 2010. Prior to his career in Fiscal Policy Agency, she worked for the Digitex of Indonesia. She holds a bachelor degree from the Economic Faculty, University of Indonesia, Master of Finance degree from the University of Indonesia, and Master of Public Policy degree from Hitotsubashi University, Tokyo. Ms. Pandey Putu Oka will present the topic of tax policy responses on COVID-19 and tax policy strategy in 2021 with Indonesia's context. Please, Ms. Oka, the floor is yours.
Thank you, Ibu Suska. Can you hear my voice? Okay. Yeah. The Honorable Deputy Minister of Finance, Mr. Suhasil Nazara, Mr. Pascal Sen Aman, Eselon 1 officials, and also government representatives from the Ministry of Indonesia, distinguished speakers, and all webinars participants from any country that you are in. Very good morning and very good afternoon. And I wish all of us the health and strength to get through this COVID-19 pandemic. Well, in accordance with the topics assigned on these occasions, I will share the experience of Indonesia in supporting the national economic recovery from the COVID-19 pandemic, especially the support provided through taxation measures. Ladies and gentlemen, the pandemic COVID-19 has forced the government to undergo several large-scale social restrictions since March 2020, and it affects economic slowdown in the level of consumption, spending, investment, and also net exports. COVID-19 creates shocks to Indonesian economy, both on demand and supply sides. Manufacturing, transportation has been identified as some sectors that receive bigger impact as a result of social restrictions and also stay-at-home campaigns. While sectors related to the internet and information activity has been the one that shows good ability to survive and increase in growth. And the overall slower economic growth leads to the higher unemployment and also poverty rate. Please go to the slide 3. Okay, ladies and gentlemen, in dealing with the COVID-19 crisis, the Indonesia's policy responses is emphasized on 3 aspects. First, protecting people's health and also saving lives by providing health measures. Second, maintaining the purchasing power, particularly for the underprivileged, by promoting social safety nets. And the third, preventing the bankruptcy by improving business support, including giving tax incentives and also facilities. The tax support itself is focused on 3 aspects: health, the businesses, and the workers. The objective is to maintain the supply of, in the health sectors, medical products and equipment for handling the COVID-19, raw materials and supporting materials for domestic businesses, provide more cash flow space through reducing tax burdens, preventing bankruptcy of the businesses, and in the end, it is also expected to reduce the risk of workers' layoff. And hence, what are the taxation supports that have been provided by the government so far? Can we please go to slide 5? Okay, in the health sector, the government encourages the availability of goods such as personal protective equipment and medicines needed to tackle the COVID-19 outbreak by providing value-added tax facilities that are not collected or borne by the government. And also income tax exemption facilities for import activities and the provisions of relevant services. And these facilities are provided to government agencies, referral hospitals, and other parties appointed to assist in handling the COVID-19 outbreak, of course. And in addition, COVID-19 donation is treated as giving some additional deductible expenses, and also some exemption is also we give also to support the use of assets to support the government effort to tackle the COVID-19 as well. Exemption on taxations on the import of goods for the purpose of handling COVID-19 pandemic. We give the on the tax kit and also reagent laboratory, medicines and vitamins, medical tools, medical protective equipment, etc. Please go to slide 6, please. Well, the support to the business sector is provided in several facilities in the tax facilities. Slide 6 and also 7 will provide information on tax facility to support businesses and also workers. First, employees of companies engaged in certain industries such as manufacturing and transportations with annual growth of income of not more than IDR 200 million are eligible for government-borne income tax facilities. And these employees will receive additional income in the form of taxes, which are not deducted by the employer, but rather it is given in cash to the employee. The next one is we also provide MSME taxpayers with temporary exemption from income tax. In addition to that, the taxpayers engaged in certain industries also receive a 50% reductions of income tax installments, and a facility in the form of accelerated restitutions up to a total tax refunds of IDR 5 billion rupiah. And in addition to that, the support for the businesses is also provided in the terms of incentives to reduce the corporate income tax rates from 25% to 22% in the year 2020, which then in the year 2022 and beyond will be lowered to the level of 20%. The tax supports during the COVID-19 pandemic generally has three characteristics. The first one, it is temporary with a provisions period of about 3 to 6 months. And then the second one, it is given in a selective and targeted ways, aimed at helping certain segments. And to identify these needs, prioritizations is carried out according to the severity of the identified impacts of the pandemic in each business sectors. The third feature is it is flexible with gradual adjustment to the economic needs. And in order to optimize the benefit for the recipient taxpayers, the provisions of tax supports is made as flexible as possible in terms of the period of provisions, as well as the segment of the recipients. Regular reviews are always carried out on its use as well. And based on an assessment of existing needs, the period for providing incentives can also be extended, and the segment of recipients can also be expanded. Please go to the next slide, which is slide 8. And in terms of the realizations of the use of COVID-19 tax incentives, the numbers shows that the tax incentives haven't been optimally used. And to obtain feedback on the use of COVID-19 tax incentives, the government has gathered information through various surveys, both conducted by the government and also conducted by the private institutions or organizations. And the survey results identified several lessons learned that the government also take into account and manage to improve later on. The first one, the taxpayers are not well informed of the tax facility, especially for the lower segment of taxpayers, SMSE and similar levels of that, because they this segment are really rarely keep up with the recent news. So because of the information's issues. And the second, the complexity or tax administrations to get the COVID-19 tax facility reduces the willingness to apply for the incentives. And but in other case, there is also an identification that the taxpayers also mentions that they need supports in other ways, such as cash subsidy, but not tax reductions or
I think Bu Oka has a problem with the connection. Okay, maybe we should proceed to our second panelist. Okay. The second panelist is Mr. Poltak Maruli John Liberty Hutagawa.
Yep.
Mr. John Hutagawa is the Director of International Taxation of Directorate General of Tax of Indonesia. Before being appointed as his current position, he used to hold the following position: Director of Tax Regulation 2, Expert on Taxation Law Enforcement, Expert on Taxation Services, and Head Office of Foreign Direct Investment 1. He received a bachelor degree of economics from Brawijaya University. He obtained Master of Economics in Accountancy and Master of Economics by Research from University of Macquarie, Sydney. In 2004, he also earned a PhD in Business Management from Pajajaran University. Mr. John Hutagawa will present the topic of the transformation of global taxation landscape and its impact on Indonesia taxation system.
Yeah.
Please, Mr. John Hutagawa, the floor is yours.
Yeah. Thank you, Ibu Suska. Very good morning for everyone. I'm glad to participate as a panelist to present the topic about transformation of global taxation landscape and its impact on Indonesia taxation system. As we know that the dynamic model of interaction between and within variables in environment have changed continuously the environment, and then the process of change could be acute, evolutionary, and or revolutionary. The impact of change could cause positive or negative to the environment, and this affect the model of interaction to reach the new equilibrium in the environment. The change has been occurred in all aspects of human being, including the global economy and taxation landscape. With regards to the international taxation landscape, this has been changed continuously, triggered by the influence of number of variables which have affected directly and indirectly to the landscape. The dynamic influence and interaction amongst variables are considered to transform the global taxation landscape. Please download my screen, my slide, please. There are four variables which have significant influence on the global taxation landscape, namely globalization, information, communication, and technology, or ICT, underground economy, and the global economic growth. Additionally, ICT has directly influenced to the landscape, but on the other way, this variable also has indirectly influenced through other three variables. Thus, the process of transformation of the landscape in overall is smoothly occurred. The directly influence of ICT on the global taxation landscape has shown by the developments of the new business models and schemes such as e-commerce, startup, gig and sharing economy, over-the-top, financial technology, virtual currency, and virtual asset. The digital business has its own characteristics, namely mass without scale, reliance on intellectual property, data mining, and user participation. Therefore, the digital business has different compared to the conventional one. The presence of digital affect the business conducted across nation without need any physical presence, and then business could be run from anywhere without limited by the time space. Tax challenges arising from digital is how to determine the nexus and the appropriate methods of allocation of the global profit from digital enterprises amongst market and resident jurisdictions respectively. Another one is how to cope with the global base erosion profit shifting conducted by most multinational enterprise with the utilization of low tax jurisdiction combined with the advanced ICT for the tax avoidance purposes. Having discussed directly influence of ICT, let us proceed to see the indirectly effect of ICT on international taxation landscape through other three variables, namely globalization, underground economy, and global economic growth, respectively. In short, there are significant influence on the landscape which are triggered by those above indirect influence. First, the influence of ICT through globalization on the global taxation landscape has shown by the expedite process of globalization, and this increases volume and amount of international transaction, in which 60% of the international transaction being occurred among international enterprises which have related party transaction between parent entity and their subsidiary or member respectively. The tax challenges arising from the globalization are transfer pricing, thin capitalization, and double taxation due to overlapping taxing right from cross-borderless transaction respectively. Second, influence of ICT through underground economy on the global taxation landscape has shown the development of digital assets such as cryptocurrency and virtual assets which are not properly recorded in GDP of every jurisdiction. This is digital underground economy, which is different characteristic compared to conventional one such as cash economy. Tax challenges arising from underground economy are the low level of taxpayers' compliance related to the high level of underground economy. In addition to the tax challenges, this needs to determine the proper exchange of information mechanism to obtain and gain the proper information, and also common tax treatment dealing with digital asset. The third, the influence of ICT through the global economic growth on the landscape has shown by our current global economic growth, which has deeply downturned at the lowest level, that is minus 4.9%. You can see on the screen, or sliding more than 7.8% affected by COVID-19 pandemic. The global growth has been confirmed with the contraction of the economic growth for the four world economy pillars, namely United States, People Republic of China, European Union, and also Japan. Tax challenges arising from this economic growth downturn are need of taxation measures such as tax incentive and relaxation dealing with disruptive effect of COVID-19 pandemic. Tax incentives are aimed to help and assist taxpayers who are infected and negative impacted by virus corona 2019 in fulfilling their respective obligation, and provide them liquidity by expediting the process of tax refund, granted tax exemption or tax bond by government, and tax reduction. Thus, having tax incentives, taxpayers could keep survive and manage their business activities, however, heavily pressured by COVID-19 pandemic. Now we move to the impact of transformation of the global taxation landscape. The transformation has created the asymmetric information for the most tax authorities, which have lack of ability to administrative their respective taxpayers' compliance properly, who mainly conducted business across nation. In contrary, this condition has triggered the increase of complexity of the tax avoidance conducted by multinational enterprises through shifting their profit to low tax jurisdiction by the use of aggressive tax planning mechanisms such as transfer pricing, thin capitalization, treaty abuse, hybrid mismatch arrangement, and control foreign companies. The current tax global challenges such as illicit funds, BEPS erosion, and profit shifting should not be handled neither properly by unilateral approach or bilateral cooperation, but this needs multilateral cooperation and collaboration. The need for international fora, such as Global Forum on Transparency and Exchange of Information or Global Forum, and the Inclusive Framework on BEPS are very important in response to the current global challenges. Those two international fora are facilitated by OECD with mandate endorsed by G20 to increase the transparency for the tax purposes. The Global Forum is established for globally transparency for tax purposes through automatic exchange of information by request, and spontaneous exchange of information. Then, the Inclusive Framework on BEPS is aimed to combat and handle the BEPS matters that cause the revenue foregone for respective jurisdiction. Now we move to another subtopic, Indonesian participation in international forum. Indonesia is actively participating in international forum such as SGATA, Study Group on Asian Tax Administration and Research, where Indonesia is the presidency up to the year 2021. ATAIC, Association of Tax Authority of Islamic Countries, Britacom, Belt and Road Initiative Tax Administration, Cooperation and Mechanism, ATAF, Asian Tax Forum, Global Forum, and the Inclusive Framework on BEPS. The aims are to show our strong commitment to cope with the global tax matters through international cooperation and collaboration, protect our own interests, and also provide contribution and exchange our experience to international community. In the inclusive framework, Indonesia with other 136 jurisdictions are discussing about the tax challenges arising from digitalization, which is BEPS Action 1. Currently, our discussion has been narrowed into two pillars, namely Pillar 1 about unified approach to determine the new nexus and methods of allocation of global profit properly and fairness, and the Pillar 2 dealing with anti-global BEPS or GLOBE. The discussion has been run for 7 years but not yet being settled and need more time probably to achieve the global consensus, especially to Pillar 1. Now we going to the future shape of Indonesian tax policy. Indonesia future shape of tax policy has been heavily influenced by the global tax landscape that being transformed. As a part of international community, Indonesia has shown our strong commitment to the international tax standard and norms by convergence those standards and norms into our domestic legislation framework. For example, common reporting standard by issuing law number 9 year 2017, and then meet the minimum standard plus of BEPS action deliverable such as BEPS action 13 about TP documentation by issuing Minister of Finance regulation number 213 year 2016. As Pascal mentioned earlier, Indonesian position dealing with implementing BEPS action deliverable in the front run compared to the other countries in Asia. Regarding taxation policy on digital economy transaction, Indonesia would follow the inclusive framework long-term solution for achieving the global consensus by the end 2020. However, Indonesia has already published the government regulation in Liu Law number 1 year 2020 amended by Law number 2 year 2020. Contrary to indirect tax being regarded no international dispute, the implementation of indirect tax is based on respective domestic regulation of inclusive framework on BEPS member respectively. Indonesia has issued Minister of Finance regulation number 48 year 2020 that give the legal base to appoint the foreign e-commerce as a VAT collector and then remit the tax. In addition to Ministry of Finance regulation, this is aimed to give the level of playing field among the digital business players between foreign and local players in our domestic markets. Then, as known that this business sector enjoy business growth in the period of COVID-19 pandemic. So additional tax revenue from this digital business sector is expected. With regard mitigate the risk of the COVID-19, tax instrument has been used as a part of economy stimulus to heal our economy by implementing the national economy recovery. In order to facilitate tax incentive for handling the impact COVID-19, there are number of regulations that have been issued and also budget has been allocated to finance the program. Almost all business sectors and their employees, all of ultra finance, ultra, micro, small, and medium size of business players who are infected or affected by the impact of COVID-19 are allowed to enjoy such incentive. The incentive are, for example, tax exemption or tax borne by government for employment and SME, VAT not collected, tax installment reduction, reduce corporate tax rate, expedite the process of VAT refunds, additional deductible expenses, and income tax with 0%. The above incentives are mostly tentative and regularly reviewed and adjusted for the economy recovery, which has been heavily affected by COVID-19. Having explained tax incentives, I think I should stop my presentation about the impact of the global tax landscape that being transformed to our future shape of the tax policy. Thank you for your kind attention and hope this would be benefit for you all. Then I return back the floor to Ibu Suska as a moderator.
Thank you, Pak John. Before we proceed to the third panelist, I think we should go back to Bu Oka's presentation, who hasn't finished yet because she lost the connection. So, Bu Oka?
Yes, Ibu Suska, thank you.
Please continue, Bu.
Yeah, really apologize for the technical problems. Can you please go to slide 11? Okay. I think by considering the development of COVID-19 outbreak, which cannot be predicted when it will actually end, in 2021, we are still faced with the possibility of situations where commodity demand and price would still be low, and economic performance would not fully have recovered. And when the business would still be in recovery period after experiencing business loss, of course, the tax extensification and tax intensification efforts would not yet be optimal. And in addition, the challenge of tax revenue also comes from several other factors. For example, changes in the economic structure and development of electronic transactions that shift the business trend from conventional to digital economy. And all of this requires adjustment in terms of governance of tax regulations and also the tax administrations. And this support would still be required for businesses to increase competitiveness and quality of human resources. But on the other hand, we also need sufficient revenue sources to be able to accelerate recovery, economic recovery more quickly. And for this purpose, compliance must always be improved. The tax base needs to be gradually expanded. Please go to the next slide, please. So with that, being said, in 2021, the support for national economic recovery will also be provided through appropriate and measurable incentives. I mean, when giving incentives, we would like to address the concerns on appropriateness and also effectiveness of them. Also, in terms of improving the quality of human resources, supports will also be provided in terms of vocationals and also R&D activities. So research and development will be one of the main focus on this regards. And the strategy to optimize tax revenue also includes the effort to increase voluntary compliance, tax obligation supervisions, and law enforcement, continue tax reforms in the fields of organizations, human resources, IT and databases, business processes, and also the regulation itself. So in addition, the government will also take the relevant actions to improve good governance in the context of digital economy taxations, and develop the digital-based customs and excise services, expand the accessible goods, and also support relevant policy concerning protections for the community and the environment. With that being said, I think that will be end of my presentations. I hand the floor back to the moderator, Ibu Suska. Thank you.
Thank you, Boka. So let's move on to our next speaker, Mr. David Bradbury. Mr. David Bradbury is the head of Tax Policy and Statistic Division of the Center for Tax Policy and Administration at the OECD. He joined the OECD in April 2014. He now leads a team of economists, lawyers, and statisticians who are focused on delivering high-quality economic analysis and tax policy advice. Prior to joining the OECD, he was a lawyer, a member of the House of Representatives in the Australian Parliament, and a minister in the Australian government. Mr. David Bradbury holds an undergraduate degree in arts, majoring in government and public administration, honors degree in law, and has completed postgraduate studies in taxation law at the University of Sydney. Today, Mr. David Bradbury will present the topic tax policy support to support inclusive and resilient growth. Please, Mr. David Bradbury, the floor is yours.
Well, thank you very much, Suska, and thank you. It's great to be able to join you all and to be speaking along with colleagues such as Oka and John, and thank you for your kind words. Now, what I would like to speak to today is the challenges that Indonesia and all countries face as we work our way through this pandemic. We've heard a lot about the emergency policy responses that Indonesia and other countries have put in place in order to respond to the urgent challenge, the health challenge and the associated economic challenge of the pandemic, where now most countries going through what we would describe as the recovery phase, which requires some coexistence with this virus, but also stimulus measures to try and ensure that our economies are able to keep moving. And we will be moving into, at some stage, the longer term discussion around how we put our public finances back on a sustainable footing. Now, of course, the nature of the emergency response has required countries to deploy a vast array of fiscal resources to this challenge. And that has not only affected government expenditure and seen a significant increase in government expenditure, but we've also seen a massive impact on tax revenues as a result of the shutdown and lockdown measures that have been put in place across a range of countries. Now, that means that the challenge ahead is a daunting one, but one thing that I would say, and I would reiterate what Pascal Saint-Amand had said earlier in the session, is that it's important not to move towards fiscal consolidation too soon. To do that would be to risk undermining the recovery and would frankly be an example of the global community not learning the lessons from the last major global financial and economic crisis that we went through, where countries moved too quickly to move towards fiscal consolidation. So I think that's an important point to remember. Now, many countries, in fact, most countries are facing this daunting challenge of how to build a tax system that will help raise the revenues that will be needed in the long term to sustain the public goods and services and the provision of those public goods that will be needed. Now, we think that there are some important areas that countries should focus in on, and I'll speak about those in a moment. But I think it's always important to think about the starting point that any country is coming from. And every country will need to tackle these challenges with a country-specific set of solutions. And we recognise that that will vary from country to country. And in the case of Indonesia, I think one of the things that does stand out, and this is a point that has been made by speakers earlier in the sessions today, is the relatively low tax GDP ratio from which we are starting. Now, what I'd like to do is spend just a few moments identifying some of the potential challenges, and then to focus in on some of the areas that I think will be ripe opportunities for trying to think about how to respond in the longer term to that challenge of putting our public finances back onto a more sustainable footing. Now, clearly, a challenge that many countries face is tax capacity. I think that in Indonesia, we've seen the country make extraordinary gains in recent years. And the benefits of those gains, I think, can be harnessed and utilised as we move into this next phase. So congratulations on the efforts that have been undertaken. I think that will hold you in good stead, to the extent that some of the things that John was talking about there in terms of harnessing the opportunities of ICT and new technologies to take the tax administration to the next level. These are investments that I think are only going to support the longer term strategy of putting Indonesia's public finances back on a firm and sustainable footing. Now, I think it's fair to say that Indonesia faces some challenges in terms of the underutilisation of some of its tax bases. I think that there are some taxes that could be better utilised, and indeed some of the taxes that are already important sources of revenue, the base of those taxes could be broadened even further. And that's something that should be considered and should be at the forefront of Indonesia's thinking as we move forward. Of course, one of the big challenges that many countries face, and I think this is a big challenge in Indonesia, is the challenge of informality. Informal workers, informal economic activity, that occurring in the underground, to the extent that it continues to occur there, it's hard to tax it, and indeed to the extent that you begin to increase levels of taxation on those in the formal economy, it increases the divide between those in and those out of the formal economy. This is a big challenge. Many countries face it, and it's something that has to be the heart of any strategy to respond. Of course, we live in a very global environment, and globalisation has meant that the mobility of our tax bases, or at least some of them, has increased, and there is international tax competition. Now, Pascal mentioned earlier, John spoke to this just a few moments ago about some of the international efforts to try and coordinate and achieve multilateral cooperation that will reduce some of the risks of that tax competition and that mobility. But these are factors that need to be kept in mind, as indeed are considerations such as tax avoidance and illicit financial flows and issues of that nature. Now, what can we do? Now, we think that the key is to think about building a tax system that will support inclusive economic growth. It's not just about generating the economic growth that all of our countries so desperately are seeking at this point in time, but it's about trying to build inclusive economic growth to make sure that some of the benefits of that growth are being broadly shared across the community. And where there are particular equity or inequality issues, then the tax system can have an important role to play, not just in terms of raising the money that will be spent to that effect, but also the way in which we raise those funds. So where can we start if we're thinking about inclusive economic growth? I think we can begin with the personal income tax. Now, the personal income tax plays a small and potentially growing role in the tax base in Indonesia. We do think that this is going to be an area that needs to be considered over time. If that tax to GDP ratio is to be increased, then some efforts will have to be undertaken to broaden the base of the personal income tax. Now, by definition, that will mean that more people will be paying the personal income tax, and that brings with it its own challenges in the political economy. But the personal income tax is a very, very solid source of revenue in most countries, emerging market economies, particularly as they transition into even higher stages of economic development. But importantly, it's also one of those taxes that is very progressive. If designed correctly, it can raise more funds from those who have the greater capacity to contribute, and therefore contributes to achieving inclusive economic growth. Now, social security contributions or social contributions, however named or described, can play an important role in lifting the overall level of taxation, but doing it in a way that provides a clear justification for those tax increases, and by linking them essentially to improvements in the social safety net and social protection systems that are in place. Now, this is something widely used across OECD countries. Social contributions only contribute to a very small part of Indonesia's tax base. But as the country begins to think about not just emerging from this pandemic, but building the sort of social protection system that may be necessary in the future, it may be an area of tax policy that Indonesia would consider in greater detail. Now, of course, other important taxes from an equity perspective are property taxes and taxes on capital income and capital gains. We think that more can be done here. Obviously, these are taxes that require constant improvements in tax capacity, particularly the property tax, which requires the property cadastre. It requires detailed information, valuation. These are not easy matters to manage, but from an equity perspective, property is a base that we should be taxing. And if we think about the point that I made earlier about the mobility of our tax bases, property is one of the least mobile tax bases there is. If you increase taxation on property, it certainly does not lead to the relocation of that property in the way that financial capital might relocate, because property is relatively fixed in nature. It's there, it cannot be removed, and it is difficult to avoid if the system is implemented and set up appropriately. And capital taxation as a result in particular of the work that has been done globally through the automatic exchange of taxpayer financial account information through the Global Forum. This means that the ability of individuals to hide their assets or income offshore has been greatly diminished. And that allows countries to exercise their taxing rights in relation to capital income with much greater effect. And we encourage you to think about that. Now, I'm conscious of the time, so I'll move through the next couple of items quickly. But just to note that I want to congratulate Indonesia on the great efforts to expand the VAT base to tax those cross-border digital supplies. We know that our team here at the OECD has been working closely with you to implement those reforms. They're important reforms, and they're generating real money and real revenue for the government. So congratulations on that. We hope you continue your very strong efforts and contribution to the international corporate tax work. And I know John is very heavily involved in that, restated Indonesia's commitment just a few moments ago, but that work is obviously through the BEPS project, taxation challenges arising from digitalization and beyond. These are important areas that Indonesia can continue and should continue to play an important leadership role. One point about the corporate tax, I know that efforts have been made to reduce the statutory rate. One thing that I think all countries need to be thinking about is the extent to which they currently provide investment incentives through the corporate income tax system. And in particular, the debate on Pillar 2, the Globe rules, which will, when implemented, effectively achieve a minimum level of taxation across the globe, will, I think, require countries to think about the extent to which they are currently providing those tax incentives for investment through the corporate income tax system, and to think about whether they have the settings right. And this is something that we expect many countries will be wanting to reassess these issues in the coming years. A couple of final points. I think some areas of crucial importance for all countries, but this certainly is the case in Indonesia, is in relation to taxes that are environmentally related and those that relate to health related considerations. Given the Paris commitments, there is a significant amount of ambition that needs to be realised on the ground in countries, and it is almost inconceivable that that level of ambition that is required can be reached without some degree of a carbon price being put in place. There is an opportunity here, we think, for Indonesia to move, to perhaps tread cautiously and carefully in that direction. We've seen a number of other emerging market economies and indeed some lower income economies thinking about the idea or introducing a carbon tax, at least at a very low and modest level to begin with, but to put in place the architecture and the infrastructure to collect a tax of that sort with a view towards potentially scaling up the rate of tax that might be collected over time. Now, this is not just about pursuing environmental objectives. As I said before, the level of ambition that is needed to meet the Paris Agreement objectives will require a significant amount of revenue to be raised. And it's not just revenue that we would consider should be there to support environmental initiatives. It should be of sufficient scale to support the broader fiscal policy objectives of governments. So we think that environmentally related taxes are going to become a critically important part of the overall budgetary strategy of governments as they move forward. Can I also congratulate Indonesia on the fine work that has been done in phasing out some of the fossil fuel subsidies. That has been tremendous work, not easy to do, but very effectively done. But we do think that there is still some scope for increases in various excise taxes that particularly in areas such as transport-related fuels. When we look at other emerging market economies, G20 countries, OECD countries, Indonesia does not raise a lot of money from these taxes. We think that apart from the environmental and health benefits that flow from those taxes, there will also be the fiscal dividend that will produce. And we encourage further work in that regard. And just finally on health-related taxes, we think that more can be done in the area of the taxation of tobacco in Indonesia. Alcohol taxes are less significant because of the significantly lower consumption levels in Indonesia. So we don't see that as being as big a priority, but tobacco is certainly one of those areas where harmonising the taxation of products would be important and potentially lifting the level of tax to levels that are aligned with where the World Health Organization would suggest would be helpful. We also think that it's important to not rule out the contribution that can be made by a whole range of other taxes that support improved health outcomes across the community. I know there has been a debate in Indonesia around taxes on sugar-related drinks. These are important discussions that need to be had because not only are they about revenue, but they're also about using price signals to achieve improved health outcomes. Now, I'll leave my remarks there. Obviously, there's a lot to do, but the final parting message I'd like to reinforce is, yes, the pandemic has put a big cost on the budgets of governments. We are all very conscious of that, but let's not move too quickly in trying to use the tax system to pay for and finance some of those responses. We should be thinking about this, we should be planning, but let's not undermine the recovery by moving too fast, too quickly in moving towards increasing taxes. I'll leave my remarks there.
Thank you, David. Next, we will have Ms. Ai Ching Pan, Ms. Ajeng Pan is the market leader and tax partner at PwC Indonesia. She currently also has several remarkable external roles on the board of founders of Indonesian Service Dialogue, Taxation Committee for American Chambers of Commerce, and committee members of Education Division at Kadin for alumni of Lemhanas. She holds a bachelor degree in economics and accounting from Untitled. In her career as tax specialist, she previously spent a couple of years working at PwC Hong Kong as well as PwC Australia. In today's session, she will discuss how tax policy and administration affect the investment decisions of investors from the point of view of business. Please, Ms. Ajeng, the floor is yours.
Thank you. Good afternoon, good morning to all honorable speakers and distinguished panelists and everyone on this call. I hope everyone is doing all right in these really crazy times that all of us are facing across the world. First, let me focus on things that we and business players applaud on the MOF, Minister of Finance, and Directorate General of Taxes in Indonesia for the continuing efforts to improve tax policy and administration in recent years. Those include DGT efforts in digitalizing of services for the ease of administration for taxpayers. Several taxpayers would say that Indonesia has more tax filings than the average country. But generally speaking, the tax compliance burden for filing has improved, significantly improved. The DGT efforts in digitalizing has helped reduce the time, simplifies the steps for taxpayers in their tax filing, for example, with the ESPT, e-filing, and most recently also they introduced the electronic objections. So as you can see on the slide, we of course also welcome the reduction, business players welcome the reduction of the corporate income tax rate. I noted according to OECD, the average corporate income tax rate in the world in 2020 on average is 20%. Indonesia will reach the 20% in 2022. Also, with tax incentive programs such as super deductions for the R&D, research and development, occasional tax incentive to the profits, that all has been very positive to taxpayers. Oftentimes the headlines, the tax policy such as tax holiday, tax incentives are aimed at attracting more investment and business. But I would like to emphasize that using tax policy and administration to attract investment can be a great useful tool to make Indonesia more attractive and friendly for business players, but only if all other things are being equal. It is important we consider fundamental issues or fundamental problems with tax policy and administration and how the two tie together on implementation before we look at tax incentives. In my view, first of all, business players typically do not mind paying their fair share of tax as long as the tax rates are reasonable. And with recent corporate income tax cut, we can say only a very few would argue the corporate income tax rate is not reasonable. But perhaps more important is how the rates are applied and administered. because it will be fair to say the potential impact of poor or uneven or unfair administration affects the real effective tax rate. So for the investors or companies have to pay. It's worth noting the corporate income tax rate has been made lower to make it more competitive compared to our neighboring countries. However, also, I just put a note there that companies in final tax regime still cannot benefit from the reduction in the corporate tax rates, in the reduced corporate tax rate. When a business player is considering entering the market or increasing their investments, they are going to do due diligence to try to understand not only the top line tax policy, but the practical issues related to how they are being administered. For example, if a company has a lot of expenses that could potentially be denied from deductibility standpoint, a 20% top line corporate tax rate means nothing. If due to deductions denial, the actual effective rate could become higher or much higher. Also, if a taxpayer will have to pay, for example, a lot of advanced VAT or advanced corporate income tax, for example, on imports. If they are difficult to obtain, if those business players are difficult to obtain refunds within any reasonable time period, then they're going to factor this added cost into their investments or business models. I'm going to share with you, the next slide, I'm going to share some of common issues that I observe have been faced by taxpayers or business players. Before that, let's try to understand about the views of investors on the tax environment in Indonesia. I noted in the investment community, in particular government relations and tax people within particular industries tend to be a close-knit community and have regular communication about issues they faced in day-to-day. So they share information about their practical tax experiences with their managing their tax affairs in Indonesia, for example. So day-to-day in the field with business players will certainly influence and impact what business players will think about Indonesia as an investment and business destination. Quickly, let's see, where do companies sometimes run into issues in terms of competitiveness or our competitiveness? If the business player, if the business plan of a potential business attracts all kinds of tax risks, then obviously business players will be less inclined to invest. Let's see, like here, there are a number of examples on the screen. Those include issues such as the restriction on crediting input VAT during the pre-production. Appreciate that this issue was being addressed already in the draft or in the tax omnibus bill. And secondly, also the tax treatment of true-ups and true-downs arrangements. That's also something that's, can potentially create uncertainty. And then number 3 is the application of the rules of law. Indonesia has a tradition where the court rules independently on a case-by-case basis, whilst in many countries I observed legal precedents help shape certainty over time, where laws are not clear in certain areas. And the other point is the whole system of the withholding taxes and mandatory audits for refunds may be another area impacting competitiveness of Indonesia in the region. Because ideally, if a business player knows that they will have to pay a significant amount, for example, Article 22, import tax, far in excess of their expected annual corporate tax liabilities, and that could take up to a few years to get the money back, the cost of that also factors into an investment or business decision. Often business players say, rather than requiring taxpayer to pay these significant amounts upfront, why not trust taxpayers or business players to pay their own estimated corporate tax liabilities based on their actual results? In short, any tax prepayment is done or can be done based on taxpayers' own estimation, and based on my conversation with business players, there are fines for the government to impose penalties for underestimated tax payable. Also, business players say, or taxpayers say, a simple administrative errors sometimes can also create huge penalties, even when there's no intentional wrongdoing and all relevant taxes have been paid. This is more so in the context of, for example, zero rate of VAT on export. Appreciate that this also is being addressed in the omnibus tax bill. What are taxpayer or investor wish list? The next slide, right? Okay. Above all, they wish to have a tax system that has clear and consistent rules, that is consistently applied, and where above all they can have some level of certainty. Therefore, based on my observation and based on my interaction with many business players, easily obtainable private rulings or advanced pricing agreements could really help here. And another point that I like to share here is the trust between the ITO and taxpayers. It seems to be an area that could use or could have improvement. It's fair to say most investors are perfectly willing to pay their fair share of taxes in this post-BEPS tax world we live in now, right? But there needs to be a certain level of trust between tax authorities and taxpayers. The tax authorities trusting that taxpayers will do the right thing and comply. And the taxpayer trusting that the tax authorities or the tax auditor will do the right thing during audits and make reasonable and justifiable conclusions and assessments. Ideally, taxpayers expect the tax audit to be conducted and driven solely by whether the taxpayer has been complied. And therefore, risk-based audit selection strategy should be considered here. Tax audits often lead to tax assessments. Taxpayers often face a significant economic choices if they do not agree and want to challenge the assessment. Either they pay the tax upfront and then go through the appeal process that can take years, or else risk an additional, say, 100% penalties if not successful. Especially given the lack of precedence or consistency in the courts, this means that often the investors must tie up significant funds for years, that could otherwise have been invested, and this usually have a big impact on the cash flow of the business. Now, coming back to the tax incentives such as tax holidays and other tax incentives, this can be a great and useful tool to make Indonesia more attractive as a business destination. But to use them effectively, I believe it's important to understand that the incentives in themselves will not be the draw or deciding factor unless all other things are broadly similar or close. On the points about other factors being equal, the points I mentioned previously about current tax administration will have to be considered when comparing experience with our investment peers in the region. So if the environment with the tax holiday is much more difficult than another jurisdiction, it's highly unlikely that a tax holiday or incentive will of itself move the investment decision. I hope the sharing today are useful. Yeah, while we applaud the Minister of Finance and DGT efforts in recent years to improve the tax policy and administration, business players welcome further enhancement coming more in the tax policy and administration in the short term and also in the medium term. And we certainly want Indonesia to be having a great reputation, the tax environment to deal with. Okay, with that, I hand this over to Ibu Suska. Thank you very much.
Thank you, Ai-Ching. So we will move to the Q&A session. So we have some questions we selected for the first round. And if we still have time, then we will have the second round. The first question is to Ibu Oka from Admira Rivani. Tax collection should be considered by ability to pay principle, especially on this pandemic era. On the other hand, the government needs a lot of revenue from taxing to handle this pandemic. How to deal with this dilemma? The next question is to David from Dian Aditya from DG Fiscal Balance, Ministry of Finance. In facing this pandemic, there is a survey result which states that basically taxpayers do not mind to pay tax. But the major problem for taxpayers is lack of capital and the low level of public consumption. According to the OECD, what kind of tax or economic policy should be implemented? And the next question is to Pak John from Stephen Gardner. The appointment of foreign companies as collectors on VAT on e-commerce sales to Indonesians was mentioned. What aim does the tax authority have for expansion of this program? How many companies ultimately will be required to collect this VAT on cross-border sales? What are some examples of companies currently collecting the VAT? Okay, those are the three questions. I think Bu Oka will answer the first one. Please, Bu Oka. You're still muted, Bu Oka.
Okay, can you hear my voice?
Yes.
Okay, thank you. Yeah, thank you, Ibu Suska, and also for the questions. Yes, during the COVID-19 pandemic, I think we should put our focus not on maximizing the tax revenue, but more on surviving the economy. And as a result, other ways like tax compliance is an area that we need to put our concerns on, and also establishing the good governance, fairness, level playing field in taxations would be other important area that we need to focus on. And we do hope that with those efforts, we could also expect that it would contribute to the strengthening of tax base in the future. I think that would be my answer, Ibu Suska.
Thank you, Bu Oka. Next will be David. Would you answer the question?
Yes, thanks very much. If I understand correctly, the question was, in particular, where there's a lack of consumption or demand, how do you stimulate economic activity in that context? I think one of the challenges that we face in the present economic circumstances is that typically, if you think about what happened during the global financial crisis, the response of governments to try and stimulate economies was very much about putting cash in the pockets of consumers and supporting consumption in that way. Whereas what we know is that apart from the fact that in parallel, many governments are still imposing restrictions on people's lives in order to fight the virus, that is also having an impact on the willingness of people to spend, and overall consumption levels have been affected by that. I think that there's only so much governments can do in that regard. If people are afraid of going out and spending their money in many public places, for example, then all government can do really is address the underlying health issue. If they can address that to the extent that that satisfies people's confidence levels, that will be important. I think as we think about the future and we think about rebuilding our economies as we emerge from the crisis, an important area will be thinking about those longer-term areas of national investment where there may be shortages in existing levels of investment. So I'm thinking about in areas such as physical and social infrastructure. Physical infrastructure, obviously, there are very few countries in the world where they've reached a level of physical infrastructure that everybody is satisfied that there's nothing else to be done. In many countries, there are a lot of projects that are worthy projects that perhaps have not been on the agenda because of previous economic circumstances. If we're looking to rebuild our economies coming out of the crisis, identifying those valuable projects and directing our expenditure towards them will be important. That's physical infrastructure. In terms of social infrastructure, obviously, moments such as these, a big global pandemic, it does give us the opportunity to reflect upon not just the challenges that we face today, but the type of society and community we want to build into the future. And that may involve us having a rethink or redirecting our attention towards investments in new areas. And when we think about social infrastructure, that might be such as supporting more investment in education and training. It may be in building a stronger social safety net. It may be in supporting research in areas that are related to building resilience in the future, such as healthcare. I guess one policy area that brings these two aspects together, that is long-term infrastructure demand, but also building capacity for resilience in the future, is also infrastructure that protects us against future environmentally related shocks. So if we are able to invest in projects that are going to improve our independence from an energy perspective, are able to meet our objectives in terms of what we agreed to at the Paris Agreement, then hopefully that will be an area that governments will focus in on. And we've seen a number of governments already begin to turn their attention towards rebuilding in a green fashion. So I think there are opportunities there, and they would be areas that we would encourage people to think about.
Thank you, David. Pak John, please, for the third question. You are still muted, Pak John.
Okay, thank you, Bu Suska. Yeah, the reason behind the appointment of the foreign business player of platform being appointed as a VAT collector is to provide them to provide level of playing field that I mentioned earlier between foreign and local platform. Yeah, so we want to create the level of playing field in digital economic transaction in Indonesia. And also, of course, by appointed them, we could enlarge our tax base and improve or get the additional tax revenue from digital economy transaction. Right now, there are 28 foreign platform appointed as a VAT collector. Yeah, for example, yeah, I think you know all about the films. Yeah, Bu Suska, you know the company who, yeah, who provide the films to Indonesian customer. Yeah, I think this is one of the company, and also music. I think Bu Suska also love the music. I think we know what the company do that business. Yeah, so as long as the company conducted selling digital product or services to Indonesian customer, and then they meet the criteria, the turnover is more than 600 million rupees a year or 50 million rupees a month, and then the number of the user 12,000 a year or 1,000 a month, so they are classified to be VAT collectors. And then for be a VAT collector other than appointed by our Director General, also they can do it by self-assess. So I think that's all that I could respond to that question. Thank you, and I hand over to Ibu Suska.
Thank you, Pak John. We should move to the next question. I think we still have a lot of questions, but maybe due to the time constraint, maybe we will choose just some of them. From Renata Purba to Bu Oka, how do BKF measure the effectiveness of the current tax incentive? Previously, you mentioned that at initial stage, many people didn't aware of this tax incentive. What measures have been taken by MOF to increase the awareness? And for David, from Nidia Hapsari, observing from different countries' experience, what do you think is the best method for Indonesian government to increase the participation of informal economy? Should there be a step taken before broadening personal tax base? Please, Bu Oka.
Yeah, Ibu Suska, thank you. Ibu Renata, I think we continuously monitor the incentives, the request, and also the realizations. The Vice Minister stated earlier that we publish tax expenditures report annually to see where the revenue forgone is and who benefits from our tax incentives. And we also make sure that to simplify the process of granting the incentives and also establish targeted and measurable tax incentive. And also in the context of socializations of the tax incentives and the policies, I think our colleagues in DGT are also committed to continue the activities as well. In addition to that, actually, when we are trying to see whether a tax incentive is really effective or not, it can be seen from many ways. We can see the utilization levels, for example, and then also to see whether it reach the target or the objectives being prepared in advance of the tax incentives when it is formulated. So what is the correct solutions on the issue will also depend on the root cause that is founded. So if the utilization level is the issue, then socializations, maybe not in a general socializations, but on, more on a targeted socializations will also be done to increase the awareness of the public in this regards. I think that would be my answer, Bu Suska.
Thank you, Boka. David, please, for the second question.
Thanks very much. And it's an excellent question. And I wish I had an excellent answer. My answer will not be as good as the question because this is an incredibly difficult area. But what can we do to try and address the informality question? And should that be a precondition before we look to expand the personal income tax base? And I think this is enormously difficult, and I would respond by saying the following, that I think that you need a combination of carrots and sticks. So there needs to be some, compliance, but also some incentives. The other thing that I would say is that if you think about why informality occurs, often it's because of the incentives that exist both for an employer and for an employee. Now, what you need to do to some extent is to create a system where you build in incentives for people to formalise. So if you do nothing, and the incentive that exists for people is that if they are not in the formal system, then they will avoid having to pay tax, then they may see some benefit in doing that. But if you have any other tools at your disposal that might encourage people to come into the formal sector in order to, for example, obtain various government benefits or support from government, then that equation might be a little bit more evenly balanced, and you may see people coming into the system. So let me give you an example. During the emergency response phase, what we saw from some governments was a desire to put some money in the pockets of businesses, but also to put money in the pockets of some families and households. Now, when you're distributing that support, if you only distribute it to those households or those businesses that are required to register in some way, then that is one way of bringing them into the formal system. So if they either come into the formal system and they get the support, or they don't get the support. Now, some countries have done that in quite an effective way. Of course, you then need to be able to keep track of people beyond that initial granting of support to make sure that they continue to stay in the system. But I think that there are a whole range of things that countries need to think at the country level, what might work in our country, given our circumstances. But one thing that does work is if government is providing support, you make that conditional on people registering in a way that allows you to have greater oversight of their business or their employment or their activities in a way that may make it harder for them to avoid formality, but also easier from a compliance perspective for the tax administration and other government authorities. But this is an incredibly difficult area, and it's not straightforward. That's for sure.
Thank you, David. Okay, maybe the next round will be only one question because the time constraint. For Bu Aiching, what do you think for the company recovery strategy in this pandemic era, and how to deal with this business environment in this pandemic period? This question is from Devi Kania. Sorry, I forgot to mention. And what kind of support from the government that you think that the business sector needs in this period? Please, Bu Aiching.
Thank you. I think we all agree that businesses are suffering from losses at the moment. There is a reduction, obviously, also in the tax collections for the government at the same time. So, the focus on the government to revive the economy and support the business is very critical. Of course, appreciate the fact that the government has been spending trillions of rupees in terms of the fiscal packages. But the question is, look, there are still some quick wins especially when companies are suffering from not only losses but also cash flow. Yeah, the questions around, for example, the support to reduce the monthly installment, Article 25, up to 50% up to December. So the question whether that's enough, right? So the questions around whether the government can accelerate the process of getting a tax refund without getting the mandatory tax audits. Well, the quick question is now, how is the how going to be made here? Obviously, one answer always could be like, okay, raise taxes given the current economic climate. I'm sure you will agree that it's going to be very, very, very difficult for the government to raise taxes, okay, especially in the short term to medium term. And the business really needs support. Yeah, and it's very important to support their cash flow. So with the right tax policy and also tax administration in combination, I hope that they will help. They will help the country. They will help also taxpayers to survive, and to be able to survive this pandemic. So it could be it's not easy at all, I have to say. But the fiscal packages that have been provided from the government is very positive, but at the same time also, of course, there are a number of areas of improvements around whether that's also already the achieve the right targets there, and how to accelerate also the process in providing the supports to business players. So I hope that helps.
Thank you, Bu Aiching.
Thank you.
Unfortunately, due to time constraint, we cannot answer all the questions. So I should sum up this session. From the discussion today, we learned that in this extraordinary period of COVID-19, fiscal authorities in all over the world, including Indonesia, are facing the challenges to create and implement policy. The government has to provide spending to manage the impact of the pandemic. Besides, the business sector needs more support to help them survive. On the other hand, the tax reform agenda to improve the tax ratio in order to support inclusive and resilient growth also needs to be performed, so we will have a sustainable budget. In the international taxation area, we hope that the development in international taxation cooperation, including BEPS and the discussion in digital tax, will support our tax policy in order to improve the tax ratio. From the business sector, we would expect more inputs and discussion to improve the tax policy and tax administration that would invite more investment. Thank you very much for all panelists, Ms. Pande Putu Oka Kusumawadani, Mr. Poltak Maruli John Liberty Hutagal, Mr. David Bradbury, Ms. Aiching Pan for the excellent presentation and discussion. Thank you for all attendees and viewers of this panel session. I will hand it back to our MC for the next webinar agenda. Thank you. Please, Rafael.
Thank you very much, Bu Suska, and all the distinguished speakers. Thank you for the very enlightening discussion that we had now. We are now approaching the end of our webinar. To close this webinar, we are honored to invite Mr. Ben Dickinson, Head of Global Relations and Development Division from OECD. Ben Dickinson is Head of the Global Relations and Development Division in OECD Center for Tax Policy and Administration. In this role, he is responsible for ensuring that developing countries participate in OECD tax standard setting work and receive support to undertake implementation. He also manages the BEPS capacity building project designed to support the implementation of the latest international tax standards in developing countries. Working with the IMF, UN, and the World Bank, Mr. Dickinson represents the OECD in the platform for collaboration on tax. Mr. Dickinson also joined the OECD in 2005 as head of the Governance and Fragile States Unit in the Development Corporate Directorate, responsible for development assistance committees work on economic governance, conflict, and security matters. He then established the OECD's horizontal work on taxation and development and illicit financial flows. Prior to joining the OECD, Mr. Dickinson worked for the UK government as a senior governance specialist in Kenya, Pakistan, Indonesia, Russia, and Ukraine. He also master's degree in development economics from the University of Manchester. Please, Mr. Dickinson, the time is yours.
Thank you very much, Raphael. I hope you can hear me. It looks like my video is off, but I'll proceed anyway. Let me say, first of all, thank you very much to the organisers for this fantastic event. It's been great to talk to and listen to nearly 500 people, which has been fantastic. One of the nice things about my job before COVID was to travel the world and to listen to tax administrations and ministries of finance worldwide about their concerns. And in the COVID era, because of Zoom and other platforms, I've been able to listen to many more people. And it is amazing how consistent some of the messages have been, particularly in recent months, about your concerns. And there are three things that I picked up, which you've been talking about today, which actually seem to resonate all over the world. The first is that tax administrations are thinking hard about whether they could make a leapfrog step change in the use of digital technology to improve tax administration and tax collection. The second, as I think my colleague David highlighted, was that everybody is thinking hard about underutilized taxation. And it was very interesting to hear the discussion on that point. And then finally, every single tax administration is saying to me that the tolerance for international tax avoidance and evasion is hitting an all-time low. Hence, your efforts on base erosion and profit shifting and on the exchange of information agendas are particularly to be applauded. My main point about mentioning these things is that the OECD stands by to help you on all of these points, and we look forward very much to talking further with you about how we can help. One of the recent changes in the work of the OECD is that we are able to extend the offer of our services to emerging markets and developing countries across the range of issues of taxation, not just on international taxation, but on tax administration, tax policy, and so on. So we stand by very much to help you. I think my second point is that I should highlight tax is part of a broader picture of cooperation between OECD and Indonesia. A joint work program, as it is called, and that's important for you to know that we stand by in a whole range of areas to help Indonesia with your efforts of economic development and reform. And I would like to take this opportunity to congratulate BKF on the policy gap study, which has been recently completed. So we have resources in hand to be able to give you Andrew Arbach, who I think most of you know. We're delighted to be able to provide Indonesia and the broader region with one of our best tax experts, and I'm sure Andrew will continue to help you navigate the work of the OECD and is able to help you. And then I think my final point is to congratulate Indonesia on your leadership in the region, not just through Segata, but also through the G20 and stepping up to the plate on providing your experts to share your knowledge throughout the region, for example, through Tax Inspectors Without Borders and other initiatives. So let me end it there. It's been great to listen to you, and thank you so much for all of your efforts. And it's very nice to see good friends in Indonesia today, John and team, but everybody else too. Thank you.
Thank you, Mr. Dickinson. Now, before we continue, I'd like to remind everyone to fill our questionnaire form as presented on the screen at bit.ly/textwebinar survey to help us understand the evaluation and everything else during our webinar session. Now, lastly, we are honored to have Bapak Daliono, Head of Division Policy Analysis Programs of the Center for Climate Finance and Multilateral Policy, to deliver his closing remarks. Pak Daliono has held various positions in the Ministry of Finance, covering the areas of international economic analysis, investor relation, and bilateral, regional, and multilateral cooperation. He has been assigned as a member of Indonesia delegates in several international meetings, which includes World Bank, ADB, ISDB, ASEAN, ASEAN Plus 3, APEC, ASEM, and FTA negotiations. He earned his bachelor degree in economics from 11 Maret University and his master degree from International Management Institute, New Delhi, India. Please, Bapak Daliono, the time is yours.
Thank you, Rafael, for your kind introduction. Assalamualaikum warahmatullahi wabarakatuh. Distinguished speakers, colleagues, ladies and gentlemen, we have finally come to the end of today's seminar entitled Tax Challenges and Reforms to Finance the COVID-19 Recovery and Beyond. It is a timely seminar actually that discusses an issue that we are currently facing, as well as strategies to conduct in the future, given existing challenges and also opportunities. It is also my pleasure to inform you that we have actually 2,150 registrants on this event. 530 people join this seminar through Zoom webinar, and more than 500 watch from a YouTube channel in Fiscal Policy Agency. So almost 1,000 people join us today. It is a very amazing event. During the last 2.5 hours, we have discussed the main challenges and opportunities for Indonesia to improve its fiscal space in order to respond to the current crisis and complete its long-term and national development plan. In the opening session, we are grateful to have Bapak Suhasil Nazara, the Vice Minister of Finance of the Republic of Indonesia, who delivered his remarks on the tax reform in Indonesia. Bapak Suhasil has comprehensively described the progress and challenges the government is facing towards a more sustainable tax policy and administration. Following the Vice Minister, we are lucky to have 3 high-level speakers in one panel. Bapak Febrio Nathan Kacaribu, Chairman of the Fiscal Policy Agency, Bapak Pascal Sen-Amans, Director of Center for Tax Policy and Administration, OECD, and also Bapak Yon Arsal, Assistant of the Minister of Finance for Tax Compliance Affairs. They have highlighted the current condition on economic and taxation issues. Bapak Febrio Kacaribu clearly depicts the current economic situation in Indonesia, as well as key development goals of the near to medium term, and the policies designed to overcome the economic challenges. Meanwhile, Bapak Pascal shared the OECD perspective on the taxation issues. He shows the current international tax climate and global context that provide challenges as well as opportunities for developed and developing countries. Lastly, Bapak Yon Arsal, who present the current update from Director General of Taxes on digitalized tax administration in Indonesia. After having an astonishing high-level speakers, the panel discussion comprised of influential speakers in their field once again opened our mind on the current state of affairs regarding Indonesian tax policies and administration. Starting the panel, Ibu Pandeputu Oka Kusumawardani, Director of State Revenue Policy, Fiscal Policy Agency, gave us insight on the tax policy response on the COVID-19 and tax policy strategy in 2021. To support the National Recovery Program, Indonesia needs an appropriate and measurable incentive and increased revenue optimization. The next speaker, Bapak John Hutagaul, Director of International Taxation, DG Tax, give us a comprehensive understanding on how transformation of global taxation landscape can impact the Indonesia taxation system. To combat the negative impact on the COVID-19, Indonesia already has tax policy measures in several sectors. The next speaker, Bapak David Bradbury, Head of the Tax Policy and Statistics Division, OECD, give us benchmarking on how tax policy can support inclusive and resilient growth in other OECD member countries. The key to face the challenges in a global tax environment is how to build tax system that can create inclusive economic growth. Make sure the benefit the growth can share equally. As the government of Indonesia committed to the global climate change commitment, Indonesia may need to consider the implementation of the carbon tax. Other low and middle income countries have imposed carbon tax in lower level rates. This type of tax is not only for the revenue, but also to support fiscal policy and give benefit to environment issue. Finally, Ms. A. Changpin, tax partner and market leader from PricewaterhouseCoopers Indonesia, give us a view from the taxpayer side on how tax policy and administration affect the investment decision. Tax incentive and tax rate are not only in the consideration when companies are deciding where and how to invest, but how is tax policy and administration will affect a company investment decision. In closing, I would like to express my appreciation to all of our distinguished speakers and moderators, as well as participants who joined us this seminar, and for your invaluable contribution during our fruitful 2.5-hour discussion. I would also like to thank our partner, especially the OECD, for having another good collaboration as we always have. I believe OECD is one of our key partners to produce positive deliverables to forge a better policy and support the government's continuous reform. Lastly, I hope all of the precious information that we gain from the sharing of ideas, perspective, and experience through the day can be put to good use when designing the policy to handle the uncertainty in the future. Like a piece of the lyric from Leonard Cohen, there is a crack in everything. That's how the light gets in. Thank you.
Thank you very much, Pak Dalyono, for a very kind closing, Pak. And now, as we are in the end of our webinar, I want again to remind all the participants, especially for those who registered so that you'd be able to get the e-certificate, please fill our questionnaire by visiting the link bit.ly/taxwebinar-survey. Again, don't forget to fill our questionnaire. You can find it at bit.ly/taxwebinar-survey. With that, we deliver our deepest gratitude to all honorable speakers, moderator, and all distinguished participants who have been actively engaged during today's sessions. We are looking forward to having you again in our future event. Good afternoon and have a pleasant day. Thank you.